IGCSE 0452 February-March 2017 Cambridge International Examination. Topic: Final Accounts of Manufacturing Business. Paper code 045222 FM17 Doshi Manufacturing Account. The financial year of Doshi Manufacturing Company ends on 31st January. The following trial balance was extracted from the books on 31st January 2017. So this information is about the Doshi Manufacturing Company. Inventory on 1st February 2016, that is the beginning inventory or the opening inventory for raw material, work in progress and finished goods is given to you. Their revenue is given to you. Return inwards, that means the sales return are given to us. Purchases of raw material and purchases of finished goods are also given. Returns of purchases of raw material are given. Carriage inward on purchases is given of finished goods. Wages factory operatives, this will be used as direct labor. Wages factory supervisors, this will be our indirect labor. Wages office and sales staff will be taken in income statement. General expenses will be apportioned as per details. Premises is our non-current asset. Factory machinery, office equipment, loose tools are our non-current asset. Provisions for these non-current assets are also given. Capital is given, drawings are given, trade receivable, trade payables are given. Interest-free short-term loan, which is our liability, is given. Bank overdraft is also our liability to be used in the balance sheet. The following additional information is available. At 31st January, inventory of raw material, work in progress and finished goods are given. So these are the ending inventories given to us. Wages accrued means still unpaid to be added in the expenses. Factory supervisors, this is our indirect labor, it will be added in the factory supervisor salary. Office staff salary is also accrued, that means it is still outstanding, unpaid, it will be added. Value of loose tools at the year end is given. This will help us to calculate depreciation expense for loose tools. The factory machinery is depreciated 20% using reducing balance method. Office equipment is depreciated using straight line method. The loose tools are depreciated using revaluation method. General expenses 3/5 will be taken to factory and 2/5 to the office. You are required to prepare manufacturing account and you are required to prepare income statement. And third question about loose tools revaluation is asked. Let's start the manufacturing account for Doshi. We know that there are four main parts in manufacturing account. The first one is to calculate cost of material consumed. It will be calculated by taking opening inventory of raw material, adding purchases of raw material and subtracting the purchase return of raw material from this answer and subtracting closing inventory of raw material from this answer. The final amount which we get is our raw material consumed. In raw material consumed, we have to add factory wages. Factory wages are taken as per given in the question. If factory direct expenses are given, they will also be added. The answer of these two additions is known as prime cost. Then we will add factory overhead. All indirect expenses of factory are taken in factory overhead. Factory supervisor salaries, the salaries paid and the salaries which are still unpaid will be added. General expenses will be taken 3/5. Depreciation of factory machinery will be calculated using diminishing method. Depreciation of loose tools using revaluation method. The old value minus the current value will give you the depreciation. The total of this factory overhead is to be added in prime cost, and that is how our cost of goods produced will be calculated. If work in progress opening is given, it is to be added and work in progress ending is to be subtracted. We can take their difference also to be adjusted with this cost of goods produced, and our final amount of cost of goods produced for Doshi Manufacturing Company is calculated by us. Requirement A is done, that is manufacturing account of Doshi. Requirement 2. Income statement for Doshi Manufacturing. Revenues as given in the question. We'll subtract return inwards. That means the sales return. This is sales revenue. Subtracting sales return will give us net sales. We have to subtract cost of sales from this. For a manufacturing company, cost of sales is always calculated with these items: opening inventory of finished goods plus cost of production or cost of goods produced, which we had calculated through manufacturing account. This is our cost of goods produced, which we will be adding in finished goods opening inventory. Purchases of finished goods will also be added. Carriage on finished goods will also be added. All these four amounts are added. We'll be subtracting closing inventory of finished goods. After subtracting it, the final amount is known as cost of sales. This cost of sales is to be subtracted from net sales, and our final amount is the gross profit, which we are calculating for Doshi Manufacturing. From this gross profit, if we have any expenses, the office expenses or the expenses other than factory usage will be subtracted altogether. Wages of office and sales, the wages which we had paid and the wages which are still accrued, both are to be added, and we'll take the amount finally. General expenses 2/5 are taken to the office, therefore they will be taken here. Depreciation of office equipment will be calculated here. All these three expenses summed up and subtracted from gross profit will give us the final profit for the year. This is our final profit for the year for Doshi Manufacturing Company. Let's move to requirement 3. Suggest one reason why the loose tools are revalued at the end of each financial year rather than by using the straight line equal installment or reducing diminishing balance method. The answer is these are low value items which are not easy to depreciate separately, or we can say it's not practical to keep detailed record of such small items. These are the general loose tools which we have in a business, and you can imagine that using their depreciation with these methods is not practically possible. Like, share, subscribe for most important topics in the upcoming days. Commerce Lecture Online.